the risk for them. And basically that we made a 261.50. That's that price action low. We're long. And basically the call contracts that Scotty had, I told him 950. It came down to that market there, but he's still out at 910. We still like the price action on the pullback, but we do need to be mindful that yesterday equities were being sold into yesterday. We don't want to forget that. And this is going to have to be a two-part series on Apple. And I'll let Brian Plain know how to do that video production there and whatnot. And they're sliding the bid right there into the minute period moving averages on the open. So that means that this low is at jeopardy until we get above this blue line and that green line. Yes or no? Because if something goes wrong in the trade and you hold it and it goes down, that's on you. I don't mind if you make I don't mind that you make a little bit of money while you're here if there's a trade, because that'll help you get into school, and so I'm all for giving you something that way. You hear me? Free the first time. You hear me? Okay, because the only... Well, then you ought to be telling Scotty what the hell is going on at these price prints. And so what does a quarter delta equal? Other than the number quarter delta. What does that equal? That's 175 pennies on that quarter delta. That's the way you need to talk to me. Fair enough? Oh. Tell me what it's printing at. I'm not in front of my machine. I'm out here. 1035 by 1050. I got a 1040. Right? That's on those options. I'll end up getting... I had a couple guys, but... Why did you let 20 pennies? Why did you let... Okay. Oh. Well. All right. Scale the other contracts at 910. Okay. For now. Say, I got a bid. I got a bid. Give me a bid. Give me a sidewinder bid. But we also know that we popped that cherry. Say pop goes the SMF weasel. Pop goes. Okay, let's get in. I'm long here, and you got to be long the name right then and there where that... Okay, here, let's put... Anybody in denial? We got a 15-minute chart. There it is, 15-minute opening bar right below that 265 handle with an immediate sell reversal, and the 15-minute, these 10-minute period moving averages are declining. And that's where the selling is coming in, and it was a sell gap. Now, yesterday on the 15-minute chart, let me show you what they did. Today is today. But let's take a look at yesterday's open here. Watch. Yesterday's open was a gap right there, and it was a runaway. Bam. Right up to there. Now, notice that this 15-minute runaway gap within the actual market volatility, this was 6-1 over here. Today is 6-2. And volatility works different ways. Yesterday, the shorts got out. You pull back, and you had a nice double right run yesterday in Apple, because you did. But then you had that top, and they slid that bid going into yesterday's later part in the session, which they did. And now we're seeing the evidence of this gap today on 6-2 with that sell bid. We traded it long. We used a 3-minute chart. We already showed you. We came out of it. But the thing about it is that declining 10-minute and that declining 20 has got weakness in the name. So any movement right up here to half of the SMF Pro Trader bar, that's this one right here on this 15-minute chart. Here's the numbers, folks. If I can't close above it, then I'm going to keep selling short the name. There. That's 263.42 or so. 263.44. Here's the bid and ask. 61 by 32. 261.10. Okay. We made a lower low. Look. This is the 15-minute. We sold out at the high. All right, so we got markets going into negative territory. Thank you. Anyway, that's slide the bid. That was the short. The minute that it broke half of the SMF Pro Trader bar, it was a short with 15-minute period moving averages slipping. That's the weakness in the move. That's why the short is great. That's why the 15-minute chart. This is the price action. I'm a short seller for the rest of the day right here. I'll still buy off the bottom, but one thing I got to be mindful of is where I'm going to go back to my 3-minute chart. Here it is. So that's a 200-minute. Notice that on your 3-minute view, there's your right elbow gap and failure in price. Yesterday's action was very rare, where, as I've shown to you, yesterday's gap on a 3-minute, so you can see the comparison. It's very important that you understand market volatility in June and the broader market volatility on how equities are going to trade in price action. And yesterday's price action is part of volatility. They gapped it. It doesn't happen very often, and it was runaway. Shorts were getting squeezed. When the shorts got out of yesterday's move, here's what happened. They slid the bid off of that high yesterday, right over here, to that close. And I'm showing you on the 3-minute view because we do care about you. And the thing about it is you could make money selling short all the way down using the SMF Pro Trader system. We did some shorts yesterday. Here is today's sell gap. Okay, quite different. We're getting net long off of that bottom right there. That green line on this 3-minute chart is a 200-minute period moving average. And price action was made there. Price action was made there. The key to it is that the 200, which is that green line, is rising in price. And you got price action. But we're going to continue to buy and sell that bar. There's your price, $1.60 move. What a beautiful move. A quarter delta movement's $1.75. For Christ's sake, that's how it trades in the SMF mathematical system. That's putting me net long. I'm net long. But I do know that the 15-minute chart, here's your bid and ask, and I'm going to sell into it. The minute that I have a problem, I got things working for me off of that price action. But let me tell you, as an SMF profiteer, as someone like you, that when you get here and you go through this, this is what you're going to be doing. You're going to be getting these price action points in the SMF Market Maker trading platform. Rising 10-minute, price action made up to 200. That's a 3-minute. Let's go back over here and show you the 15. 15, look at that. Look at the 15-minute bar. We just looked at it. It got price action where? Right here where it should have got it. This is a nice thing. Half of the SMF Pro Trader bar, which was yesterday's close, it came down. It tested the SMF Pro Trader bar. We're net long again. And we're burning off that bottom. But we held, look, this is the bar yesterday. That's today's gap. That's half of this bar here. Today's 6.2. This is 6.1. We tested that on price action, and we're net long again. Call contracts are working fine. They got down to 965. 9.65. I told him to buy another one down in here. So, you know, he's transacted, and that was a good transaction because take a look at the high, 11.85. That's over $2.20. That's $2.20 wholesale. That's when I said to buy more of these. 3,000 contracts traded. You watched us trade these yesterday. Go find and fetch the video on 6.1 on the options Apple trade. Look for those titles. Anyway, very exciting to let you know how price action is made and why you make it. We had a market down here and we bought more. And now you can see where the volume is, 3,000 contracts. Wholesale bid here, part of that market. Did you add to it, Scotty? I know it, but I said you could add another one in that price action. blah, 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 what he did right here. Here it is on that call contract. He had an entry, and he just sold out right here. 75 pennies. But we're going to get back below the market because the reason why he sold the call contracts is because of that declining 10-minute period moving average on this wonderful 15-minute chart. But it's programmed with the SMF, Master Market Maker Bid and Ask. Wholesale was here, retail was there, and he made the adjustment as an SMF MMT would, and followed his risk management protocol to get another lower entry. You've been given a gift.